What's going on, everybody? It is January 4th, 2024, Thursday. It's going to be a day log episode over NQ and a trade review. If you don't follow me on Twitter, I posted today I'm going to start live streaming again starting next week. So tune in for that. I'll probably be doing it, or at least starting it. I would like to say right before the open. I'm primarily only going to be trading the silver bullet and just kind of giving that viewpoint to a newer student or somebody who is trading the silver bullet. I particularly love it. I think it's a great model to trade in terms of time. So I'll make sure you tune in for that. I'll be posting daily logs on YouTube again. So make sure to subscribe. Let's dig into today. This week has been interesting to see play out. It's the first week of the year, right? So we have NFP this week, which is tomorrow, and there's a lot of uncertainty with the first trading week of the year, even the first trading month, because it's the same thing as going back to the concept of the power of three. You have an open, high, low, close. And if we're looking at a monthly candle or a yearly candle, if you were, have TradingView Pro, you're able to have a yearly candle. So we have a brand new yearly candle in here. So we may want to set some type of low if we're going to go higher. You can see here, even on a yearly chart, we have a fair value gap here. So last year, or at least 2022, dipped down into it. Then last year, we expanded higher. Going back to the weekly, we're residing in between the premium fair value gap here, and then we have this fair value gap there. And looking at the information I talked about, looking at the correlation between ES, YM, looking at dollar index, looking at bonds, the Forex market, I would elect to believe that we would see higher prices, and we're going to see higher prices. I don't like, truthfully, I don't like the way we've traded this week, how low we've expanded. Tomorrow is going to be a tell on really where we should see price head next week, at least in my eyes, because I don't want to see it trade beneath the discount low, at least the high here up the fair value gap, right? So if we trade down into that and there's really no closure higher, there's no wick, there's no expansion higher tomorrow, away from even the CE of this fair value gap, that's going to show weakness to me. I wouldn't particularly like that. It doesn't mean for a fact that we're going to see lower prices right away, but if we did, let's play hypothetical, if we did close beneath that, then I would be looking for a price to trade back into this one. So tomorrow is going to be interesting to see play out. I would really like to see an expansion higher if we are going to see higher prices overall going into the new year. That's, where I'm looking at. If we were to refine just this weekly fair value gap into the daily, we have two, which was this one, and then a smaller one residing underneath it. So we close beneath the higher fair value gap here, and we're really not respecting any of bullish PD arrays. So I'm just really curious to see. It's one of those moments where I don't know. And it's perfectly okay to say that, where you just simply don't know as an analyst. Intraday wise, when it comes into a session, when it comes into a particular moment of time in a session, like the silver bullet, you don't necessarily need narrative. Does it help? Yes. But sometimes you can be going against what the narrative is doing and still get an intraday draw on liquidity correct. But looking at a higher time frame perspective and where price should lead to, I don't know right now. I don't have a hard line bias. If we respected, for an example, today, if we respected this discount for value gap here, like this closed higher and moved away from it, and even the weekly time frame, that would be a good sign. That would be, in my eyes, that it's willing to go higher. It's willing to move away from bullish PD raise. And right now we're not. We actually closed underneath this. So we may just want to dip into a little bit deeper discount and allow ES and YM to dig a little bit deeper. I'll take a look at ES. ES is inside of its daily fair value gap. I'm looking at it on another monitor. So we'll just have to see. Like I said, tomorrow we may just dip down, wick into this, and then see an expansion higher. If we do just continue to drop off lower in here and we're not showing any willingness to go higher, then I would be just looking for us to revisit the lower fair value gap here. So there's a small portion that is still open right there. So one of those, you just have to play it day by day, not make a hard line bias. There's going to be times when you can make a hard line bias and be very comfortable and confident that price is going to draw towards a draw liquidity on a higher time frame. But right now, to me, I don't have that, right? When I go into a 4-hour chart and I refine these, there's a smaller inefficiency there, and then a reclaimed fair value gap here. And still a small portion open. We'll leave that there. Like I said, in terms of just experience and looking at price and structure, it just looks a little bit odd to me. I don't know how else to explain it. It just doesn't sit particularly right with me in terms of just expanding out of this discount just away from here. There needs to be a lot more information in here for me to really start calling a hard line bullish sentiment, right? And that's just where you being an analyst and leaning on your experience and leaning on the things that you know and being able to decipher in real time what price is going to do is a skill set. Anybody telling you need to know 100% all the time where price is going to go is obviously they don't know what they're doing, because you're not going to know that. Anybody that has a concrete ideology in trading that this is going to happen or nothing else, then that's a failed ideology. You need to be lenient, be able to be fluid, and accept each side, because if you're not willing to, you're human, you make errors. So today, in terms of what happened, if you look here, we closed yesterday, or at least overnight. I'm sorry, overnight we closed underneath this old BISI, right? Once we close underneath that, that becomes an inversion level. So today you can see we traded up into it and then traded away from it. Very, very small range today. We go down into the 1-hour time frame. You can refine that same area. So this one here, you can send it out to your right and see the body's at least respecting it, but I'll leave this on. Just a pretty sloppy range. And I'll show you the trade that I took today. I'll have to, and this was on paper trading. Next week when we do the live streams, it'll be on a live account. But today there was a market maker buy model. And this is a good example of where it's not completing a market maker buy model due to a SMT divergence. So some correlated assets like ES or YM, they may reach their original consolidation. It may reach the terminal or terminus. It may reach that point, but another asset class may not. And you may be wondering why. And that's because of the cracking correlation. So you have to be aware of that. And so by pulling partials off, protecting yourself is very, very crucial. Going down into like a 15-minute time frame, a 5-minute time frame. Let's go out to a 5-minute. Let's put this on. So you can see here, I'm going to take this away. This is the inversion level. Keep that in mind. If you look at this structure here, it's a pretty clean market maker buy model. So it's also London session high from overnight. But this whole consolidation is the starting point of a market maker buy model. And you don't necessarily need to even know what a market maker buy model is to find this. That's why I don't think market maker buy models or sell models are the holy grail. I think finding an entry pattern and being very disciplined with one PD array as your entry pattern will give you a lot more profitability over time with, paired with discipline and risk management. Because I'll show you in here, if you're able to see even a 2022 model, you're able to find this entry without even knowing that this is a market maker buy model. It helps. It is in Confluence. It does help your analysis, but it's not needed. So we have original consolidation, first stage distribution, second stage smart money reversal, accumulation, reaccumulation, and then we drove up higher, failing to take out the buy side liquidity. Now, in my younger years, I'd be wondering why this was happening, and I just discussed why that didn't happen. That's why you need to be looking at SMT divergences. You need to be looking at intermarket relationships, dollar index, bonds, all in real time, all making sure that everything's in sync, aligning, moving towards your drawn liquidity. If something seems off, then that's where you need to start protecting yourself, pulling off partials, doing risk management very, very well. Because if you're not doing that, then obviously, you're not going to be profitable. So I'm going to mark this out real quick. And here you can see this is a smart money reversal. I'm not going to mark up the entire thing. And here's the low risk buy, you could say. It's a little bit sloppy. I'd rather wait for a better confirmation, at least in my eyes. Sometimes market maker buy models can be a little bit more clean in terms of entries. It's just depending. Each one's a little bit unique. You can see after we took out the sell side liquidity at the smart money reversal, there is a fair value gap here. So that is technically your low risk buy. Now you can see it's a little bit sloppy on the delivery of going higher, but it was still there, right? Now everything from the left side of the curve will be utilized on the right side of the curve for support to go higher. So if I'm looking at this, this is a mitigation block, so we would extend that out to our right. So what does price do? We expand higher, shifting above an old high here. So we have our shift to market structure. We have sell side liquidity ramp. What is this? That's a 2022 model. And so I was talking about how you don't need to know what a market maker buy model is in order to get into the market. Does it help? Yes. But sell side liquidity ramp, we have a first shift to market structure here. So you could have your entry, if you wanted to be aggressive, inside of this fair value gap there, right? If you wanted to wait for a little bit better confirmation, that's where you're looking for the second displacement higher. And you can see how everything on the right side of the curve is respecting bullish PD arrays. So our first is the bullish fair value gap here. Look at the bodies respecting it, displacing higher, open, retraces into what? Bullish order block, expands higher, shifts above an old high, comes back down into a mitigation block. And if we go down into a 1 minute time frame and we refine all of this, there's a small fair value gap right here, right? So on a 1 minute time frame, you're observing, is it respecting bullish PD arrays? Is it continuously moving higher and moving towards a drawn liquidity? Yes, right? Displaced higher, came back into down close candle, bullish order block, expands higher, traces back into discount fair value gap here, mitigation block, and then we expand higher. And I was keying off the idea that we already moved away from this fair value gap and we are inside of the mitigation block. So I was comfortable with entering into here. If I go back out to a 5 minute time frame, this is where you're going to get a little bit more clear idea on how to utilize the left side of the curve. So particularly, I'm just looking at all the imbalances in price. So we have one here, which is a reclaimed. If we extend that out to our right, we'll utilize that as a inversion. Again, here, extend it out to our right. You can see these are also areas that I'm pulling off partials and protecting myself. So in here, I'm buying, expands up, gets above old buy side liquidity. I'm taking off a partial at the inversion, comes back down into the inversion. All of these last down close candles, these consecutive down close candles here, are your bullish order block, right? Look at the bodies. Look at the way it's respecting the bodies of these. Expands higher. As soon as we get above this inversion, I'm pulling off another partial. So you can see my partial is right inside of that. Because as soon as we get into that premium fair value gap, or at least inside of a premium, that may allow price to go lower. So understanding the psychology of yourself and knowing that I'm not going to be greedy on something. This goes for every single setup, particularly for me, unless I'm very confident. I'm pulling off partials in the opposite direction. So anytime we reach into an opposing discount, an opposing premium, I'm pulling off partials because I don't know for 100% fact, concrete idea that it's going to go higher. It's going to reach above the buy side liquidity. Because if I did do that, then I would have ended up being stopped at a break even or a potential loss, rather than me paying myself as we keep moving into a higher premium. You can see here, this one got stopped at a break even because I was leaving it for the buy side liquidity and we didn't reach it, but yet I got paid. So this goes back to what ICT says with the idea of being right and wrong, because being right and wrong in the market is not equaling being profitable. What equals being profitable is doing the right thing that makes you profitable, which is protecting yourself, risk management, trade management, etc. Right? So if you looked at, we'll go over to YM and ES. These were all making significantly higher highs than NQ was. So you'll have to look at your own and do homework on it, but these were all significantly making higher highs than NQ was. So if you're paying attention to that and you're seeing that, you go back down to a 5-minute time frame and you're still looking for longs, you're still trying to push, or at least you have a position on, and you see that there's a bearish SMT. You see that price trades through this 5-minute BISI. Right at that moment in time, if you have a bearish SMT and you see price trading through a bullish PD array, that's a very, very bad sign for you, right? As soon as we trade through this in here, it's immediately telling you probably to back off because it should have already expanded from here. I should have utilized this if we were going to go above the original consolidation. It should have utilized this and it should have went higher, right? And that's just being able to decipher in real time what's really happening. And to go along with that idea is the higher time frames right now are really not primed or ready yet to displace higher or reverse higher. It may just continue lower. So you may be in an overall bearish narrative and you're fighting that momentum, right? So if you were, particularly just looking for shorts today, I think it would have been a little bit easier. But for me, this was probably the best option. And this is right inside of the silver bullet window. To kind of make note is the macro in price, which I was observing today. Pretty cool study, but right in here, this is where the macro, right towards the end of the silver bullet, just a 20-minute window, price starts spooling, and it can carry on after that as well. You can see just a few minutes more. But if price has been in consolidation all morning, very lethargic, you start seeing it wake up and move a little bit, start looking for those macros, these little windows of time. If you observe them and study them, it's really, really cool to see how price will spool in 20 minutes towards a draw on liquidity. Let's go over to dollar index real quick. In terms of dollar index is where I'm trying to decipher as well what we're going to do in the coming weeks and months. I talked about this, I think on Tuesday or Wednesday. This premium fair value gap. So looking from that dealing range, high to low, sitting basically right above equilibrium. We just IOFED'd it. So I'm curious to see if we just get an expansion lower and away from here. I talked about this feed too. It's a little bit weird, which I'm just ignoring this. I'm accepting that it's just a full up close candle. So we may want to draw higher on dollar, which would push the index futures lower, right? So pay attention to the dollar and what it wants to do tomorrow. And I think that's going to be it for today. Um, I may do a live stream on Saturday, just doing some back testing. So I'll probably make a tweet about it. Until tomorrow, good luck and good trading, everybody. Be safe.